Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, August 11th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. The full risk disclaimer is here. So let's get into the theme of the day for this market video. Well, another tricky reversal type day. It's a little bit of, I'll use the Yankee great expression. It was a little bit of deja vu all over again, right? That is Yogi Berra, because I feel like we've seen it. We've seen certainly a lot of these types of reversal type markets in 2022. And I think we just had one, I think it was on Monday, where the market started to go higher and then reversed and went lower. So that's, welcome to 2022. That's what the market has been doing, selling into strength. Again, not every day, right? We've seen a nice rally over the last couple of weeks, but for the most part, selling, if you're trading, if you're doing more trading than investing, right? And it's probably something that you've been noticing is that when there's a substantial move, when a lot of things are working, it's just really worked, selling into that strength and and waiting for the market to kind of do its thing and then look for opportunities. So again, it's one of those markets that really kind of keeps you on your toes. But we'll go over a couple things that were the main catalyst for the day. So let's start with the beginning of the day, which feels like a long time ago at this point. But we got another data point in terms of economics. We got the PPI report, which actually probably was really dropped further than what we saw yesterday for the CPI report, right? So PPI is another gauge of inflation. It's the producer price index that came in 0.5 versus 0.2, and the market had a very quick reaction to that too. But these data points, there's first of all, the market already had a pretty big reaction yesterday to the CPI report. So it was a little bit of a, kind of a diminishing marginal return, I would say, on this. And then the other thing to keep in mind, right? I mean, the reason why everybody's paying close attention to this is because the Fed is paying close attention, very close attention to it. And they need to see inflation really come down. As far as what they're communicating to us, right? They need to see the inflation come down significantly before they take their foot off the accelerator of interest rate hikes. So what is the market pricing in for the September meeting? And again, this is something that I go over just about every one of these meetings because it's important right now. It's important because the Fed is taking the liquidity out of the market. When you raise interest rates and tighten, you are taking some of that liquidity out of the market. So so it didn't really move. So as soon as I see these new data points come in, right, whether it's bad, a bad economic report or a good economic report, I'm looking to see what the market, if the market is adjusting to that new information, and it didn't adjust to the information at all. We saw that yesterday, right? The market was pricing in, I think it was something to the effect of like 68, 69 basis points, and it moved down a bit. And I think it moved down to like 50, 58 yesterday. So it actually crept up a little bit. So, what's the reasoning for that? Well, I mean, so first of all, the Fed has been talking about, like, cash carry was out yesterday, one of the Fed speakers, and was saying, hey, this isn't, this just because the numbers finally came in a little bit, it's not where they need the inflation numbers to get to. They want to see the inflation numbers much lower, right? So that's the first thing, right? The other thing is too, right? I just want to remind you, and I put this on Twitter, this thought on Twitter, is that, all of the economic data that we're getting, this type of information, and you could look this up, but this is kind of, if you've taken a macroeconomics class in college, right, they break out leading indicators, lagging indicators, coincident indicators. I always make fun of a little bit the GDP report, because traders think that the GDP report is going to tell them something to trade off of, or the market's really going to react to it. Market really doesn't react to the GDP report because it's a lagging indicator, right? And first of all, the prices that you see on your screen, right, for what equity prices are doing, what commodity prices are doing, that will tell you much more about what is going on, right, about than some of the economic reports. The economics reports are great, like, to basically say, to tell a story about what happened over the last quarter, over the last month, right? But it is what it is. It's in the past, right? So, and I'll just give you one other example, which I always see traders confused at. Again, this is something I've been doing for a long time, and I do pick up on things over time, that the way that the market moves. But everybody talking about recession over the last like month or so, the market started to break down back in the very beginning of the year, right? The market was already beginning to price in a recession in the beginning of the year, right? So the fact now that people are talking about recession, and whether or not what your definition of a recession is, I know there's various different definitions, but it doesn't really matter at the end of the day. The market has already been pricing that in over the last 6 months, right? So I'll say it again. The market is forward looking, right? It will tell you months in advance of what the GDP report is, right? So again, if this is new to you, it's fine, right? It's something that you learn over time, is that the equity prices are already absorbing that. So if you think that you're going to like pick up on these things, by reading some of these economic reports. So the point that I'm making, and again, there's a point that I'm trying to make here too, right? If you look at what's going on with the commodity prices right now, right? If you look at and we've seen prices at the pump come down, right? And first of all, and this again, I'm not an expert on, right? But I know that there's a lag, right? There's a refining lag with the prices that you pay at the pump and where the underlying commodity is. So for example, when you see gas prices begin to go down, right, the underlying commodity, it's going to take weeks to a month or so before that hits the price at the pump, right? It's not instantaneous because there is a process, the refining process, right, to turn that into. So the refiners are paying, so again, I don't want to go off subject that far into the weeds here, but you could see what's going on here with the nat gas, with the with the nat gas price. It's turning back up again, right? So does that mean that prices at the pump are going to continue to go down? Probably not. Right? You have to look at these things and say, okay, the price, I heard today on I don't know who it was this morning, but they were saying, hey, prices have gone down under $4 a gallon for the first time in I don't know however long, right? Down to like $3.99. But if you're seeing nat gases and the price of and the price of energy commodities go back up, that doesn't mean that the price at the pump is going to keep falling, right? So you have to be able to kind of connect the dots with the market. Now, some traders, they just look at the prices, they just rely on what prices are doing, and rather than any of what's going on in financial media. That's fine, because look at what happened with the bond prices today, right? So I always talk about two things, right, in terms of headwinds that we've been seeing this year. Right. First of all, the dollar actually got a little bit very, very small, by the way. But again, this was a reversal from what we saw this morning. Right. Look at what the yen did at the end of the day. So not just what happened in some equity prices today, but also if you look at some of the moving currencies, right? So the yen was up like 60, 70 basis points this morning, right? That actually finished down on the day. Right. The euro was also up pretty decently, and that gave back gains. Right. So that means the dollar actually reversed its losses, right, and actually got a little bit stronger. Right. So that's the one thing that I tend to watch in terms of macro type indicators. And there's other indicators too. I look at credit spreads and things like that too. But then, of course, what happened in bonds today? right? And you hear me say this in a lot of these videos where I talk about, hey, I don't necessarily need bond price. I would like to see bonds continue to rally and yields go lower, but one of the things that I've been arguing is saying that, hey, as long as bond prices go sideways, right, and don't pick up volatility to the downside, right, that's also pretty good for stocks at this point. But look at what happened to the move, and you could either use the 30-year bond ETF, or I know a lot of traders tend to look at what TLT did. TLT was down 2.3%, right, and broke back below the 50-day moving average, right? So we have this up channel in a downtrend, right? And I've been hearing a lot of people talk about now is the time to go long bonds. I don't know if I agree with that, right? Because this is more in a downtrend than stocks, first of all. So if you're a trend follower, you now have a pretty decisive break back below of the 20-day moving average, and we actually broke back below the 50-day moving average. That's not technical strength, right? And that's not something that I would necessarily buy. Now, on my indicator, I do have this 114.12 level that we're down into, and we're going to need to hold that. But if we start breaking back below here and getting back to those lows, it's not, in my opinion, and again, nothing is 100% certain, but I do not think that that's going to be very good for stocks. Okay. So, this is important analysis, because certainly we've seen this relationship play out, throughout the year. Right. The more that there's a relief bounce and the more that these bonds go higher, the better. Okay. And especially, what groups are going to get hit harder if rates kind of return to those lows, right? They're going to be more of your high valuation stocks, right? Because that's how it works. People use valuation models, right? And when you put the interest rates in the denominator, right, and you have smaller earnings, right, it is going to make companies more expensive. Okay, so again, just something to be mindful. I'm not saying, it was just one day. One day is not a trend, but you are breaking here back below the 50-day and the 20-day moving average. Also note the reversal bar yesterday on bonds. They, weren't heavy to the downside, but they gave back their gains. So again, I think there's a lot of implications here, and that's why I do go over the bond market usually first in these videos, because it really can translate over to how equities are behaving a bit. All right, so a lot of reversals and just crazy. I started this video saying that this morning was a long time ago, but there was a lot of things that a lot of small caps, a lot of short squeezes again. But once that bonds started to move, you started to see some of those short squeeze names reverse a little bit. All right, so where does this take? So another thing, another point for the day is I've been talking quite a bit about this small cap outperformance, right? Small caps have been outperforming the last couple of weeks, but we've hit a resistance area, right? So, and I didn't think that we were going to get there this morning, but the first thing was on this PPI number, really small caps started to move pretty decently. And we took out this version point of control. Right now, there's another one up here, right? But for now, you could see the last time that we took this out, right? We had some digestion. So we don't know right now if we're just going to get digestion, right? Or if we're going to turn back away. We're a little bit extended here, right? So, notice this gap up in IWM. So again, that's the only version point of control that I have for a while, right, on the daily chart. And then you also have the 200-day moving average in here too, which it becomes a bit powerful when you've got a big moving average and you've got a version point of control. And again, if you're not familiar with what version point of controls are, they are very important. That is where an area of really big volume occurred where price has not revisited. So this value area, right, is based on this market profile. Here's where the largest volume occurred in this period, which was the month of April. And it's like filling a gap, right? A lot of technicians know about, oh, geez, okay, we're returning to this area. It was a gap, right? It's a significant level on a chart. And in this case, using volume at price, it was a huge amount of volume, right? So that's also goes into what you hear a lot in terms of overhead supply, right? There's a lot of trapped, buyers back in here. So when we return to this level, a lot of times you're met with selling pressure. So what has to happen, right? So that we've probably got a decent amount of selling pressure at this red line. You're going to need buyers to push through, right? And if you don't have big buyers, right, then a lot of time what you end up doing is kind of fading back down, right? And there's a lot of that going on. Like, so I can give you another example, but this is what we do in the trading room all day long, is we look for these things to say, hey, that's an area to take targets. Take a look at what happened to Dutch Bros today, right? It rallied right up into one of those virgin point of controls, right? This was also the activity from April. So we rallied up to there and got rejected. Now, again, the stock was still up 5%. You're still probably happy if you weren't looking at the screens today, but a move from all the way up to 52 and a move back down, right? Another one was Goose. Look at Canada Goose. Where do you think it rallies up to? It rallies up to a familiar area where there's a lot of buyers and sellers, have a lot of volume previously, right up to there to 24 and back down to 22. All right. So again, this is automatic. Like, I'm not drawing these lines in here. If you're new watching this video, this is what our indicator does, right? Our indicator tells us where there's a lot of high volume previously in a given period, right? And again, the key is whether or not the price action passes through the point of control, right? So for example, this month down here, and where there's no overlap, there has to be an overlap of the point of control with the next value area. But say, for example, this one, right? There's no virgin point of control here because price passed through this, right? So the red lines only are left behind when price doesn't pass through a point of control. Okay. All right. So I'll move on from that, but I saw that all over the place today in earnings names, right? And right, and this was the story too. If you look at this name that went ballistic yesterday, right? NVTA, right? This also took out. Now again, it had high volume, so it was able to take out several of them, right? So it actually went through 1, 2, 3, right? Didn't have enough power to get through. Look at the volume yesterday. Right, it didn't have enough power to get through that last one. Also on the 1 hour, right? Now there's another one that lives up here, right? But notice it took out all the ones that were close together and that left the one at 1086, right? Very interesting to me, right? That the next virgin point of control was further than any of these away, and I think that's why that's the farthest that we went. All right, let me just get into some trades and some other observations for the day. Right, and by the way, I don't talk about this in every single one of these videos, but members are now receiving from me, a midday note where I'm putting out, not only some of the major themes for the day, things to watch, but I'm also putting out, some trade ideas as well. Usually I will take one of the trades, probably not all of them, but that's a new feature for members in terms of, getting kind of a midday update. So if you can't be in front of the screens all day long, what I try to do is provide the best color. And obviously you'll find that I'm not trying to brag, but usually I'm a few steps ahead in terms of a lot of in terms of themes that we're seeing in the marketplace. So let me continue. Let me go through a couple trades this morning, so you can kind of see. I was even participating in some of this DNA for the day. I thought it could maybe get to 520, but it stalled out. Speaking of a name that has version point of controls, there was one other VPOC up here at 520 that it did not get to. It did take out the 421, which I took a target at, and I did take another target halfway in between, but we were not able to take that one out. unfortunately. So and then there was one here at 508 as well. But very interesting to see the short squeeze go on. And mainly the way also that I would the way that I describe right now with this market, that we are in a tightening cycle. But hey, you could play the short squeezes to your heart's content for day trades. But I think they're much harder for trading some of these names in terms of swing trades. So names that are in downtrends, names that have this type of momentum, I usually trade as day trades. Everything else, that is more trend, that is more showing relative strength, I generally trade more as swing trades, especially in this market that we're at. I try to get into some CELH today. And again, I'm really respecting where I see resistance. I took 2 targets in this trade in the beginning of the day. I've been in and out of this name. This name has worked for me really well. We gave a webinar about this last night about staying in trades. One of the points that I made, and I'll be very brief here because I don't want to make this video too long for you guys, but I hear all the time, right, on Twitter and some other places too, that, one of the things that really helps traders' years is to have some really big winners in a few names. Now, that doesn't mean, now here's the misconception in my opinion, is that you don't have to just sit and buy and hold in a name and not manage it. I think on contrary to that, you could have a name that you did very well in for the year, but it could be something that you've managed all along. Like sometimes you're in a trade, right? You take a target, right? The name sells off, you add it back, right? Or you may get out when it gets really extended, right? And then get back into the name once it comes back into support. So that's how I envision, because I do believe in that having a few names can really drive your P&L for the year. But that doesn't mean that they're buy and hold names and that you're just sitting and riding out the winner, especially in this type of market. So Celsius, especially with a name that's going to report earnings, this is a name that I did very well in, but I took it off, going into earnings. I took it off. I actually missed the day that they announced the deal with Pepsi, but still, it was a big winner for me. But now I'm looking to get back involved in it, but only if the price action is going to warrant that, right? So I got into this trade, and you can kind of see how I manage this for the day, right? So first of all, 9:31 in the morning, I'm never putting on a big position. It's always going to be a starter in the first 15 minutes of the day because the price action is just too whippy, right? You can't tell what kind of a day you're going to have in the first 15 minutes, but you could see even in the starter position, I took a target 1, right? I took my second target, right? Top of value area. So I'm taking another quick target at 107.20. Notice where the top of value is for the day, right? So I didn't know if this thing was going to have the power to break through it. So not yet, right? And then I took the rest of the position off in this somewhere in here, 103.90, right? So it did go under. So I didn't manage this perfectly because it would have been much better if I took it off before it went below my cost basis. But I really wanted to stay in this name, right? I really wanted to be kind of legging into this position. But I'll revisit this when the market is acting a little bit different. But again, this is much I try to go over these examples because there's a lot of people who put out charts, right? And it's very easy to talk about a chart, right? But when you're actually putting the trading together with a chart, right, and how you're managing it and how you're keeping profits and not giving them back, right, there's a whole nother different perspective of just, hey, this is a great chart setup, and where you got in and where you're getting out and how you're managing it is where you're going to define whether or not you're a profitable trader investor. All right. A couple other things too. I kept on this ACHC, even though it just kind of got caught with everything else. If it happens to break below the value area, I will be out. But this is a name I've been watching for a little bit. Really, really strong. For now, it's still above the close from yesterday. So I left this one on, but if it doesn't work, it doesn't work. I'll be out of it. I got out of SMCI today. That was a starter position. I looked at this towards the end of the day and I'm like, wow, I really don't like that candle. Sometimes you don't see things to the end of the day. So I want to see this one back and fill a little bit. right? So I got out of this one, even though it really didn't give back too much. I think it's just a little bit extended here. And if it, it's the trend is not lost here, but I don't like these candles, and maybe I get a better chance maybe into the $60 region. But I love the company. I love the earnings. It just got a little bit away from itself. And then the energy trade, right? So a lot of these names are going to look very similar. So what do I do when I see so many names look the same? I look at the ETF. So this is FCG, right? Frank Charlie George. This is the Nat Gas ETF. So it's a ETF, but it's made of nat gas companies. So you've got your Devon Energy in here. So I'm going to go through some of these names. Notice how similar they look to the ETF. Here's Devon, outperformed a little bit better, right? Another one is AR, right? Very, very similar to that, right? And the list goes on and on. So you can go through a couple of these names. The coal names look very interesting to me. AMR will be very close to the top of my watch list for tomorrow. 147 is the level to watch. It did get over the 50-day moving average, so that's a good step, but I would like to see it get out of the range of volume at price value area. All right. Another one that, the refiners, also this company, MUSA, is one that I'll be watching for tomorrow, right? This has been a very, very strong name, and I love these little consolidation, periods. So this one may be ready to go, right? The level that I'm watching, notice how I go from the daily chart to the 1 hour chart, but it's just has to break out of the value area for the week. And it's very, very close to doing that. It's 288.50, right? But I love this tight consolidation that's going on in an uptrend, right? Not in a name that's in a downtrend. This isn't a name that's in an uptrend. So we'll see if it breaks there. If it doesn't, it could give you one of these shake and bake type things where it goes lower and then does a springboard, right? So some things to kind of watch with this one. I've been watching these refiners for a while too. I love this. I've tried Valero a couple times over the last month, but it just hasn't been ready yet, right? Perhaps this 50-day moving average needed to do one of these things, right? Higher, then sideways, and maybe it's going to turn back up again if the price can get over this. But you've got some type of abstract inverted head and shoulders in an uptrend, left shoulder, head, possible right shoulder. So again, it's going to have to extend from here, but I'm giving it a shot, and I'm in Valero. All right. And that's it, guys. I put on a little bit of a hedge trade. I think ARC has gotten to a place where it may stall out as well. Right. You have a bearish engulfing candle for the day. So maybe this kind of comes back and rests a little bit. So I've got a little bit of a hedge on there. Also note that it got above the value area for the week and is back down in here. All right. But again, basically it's back to where it started the week. So again, a lot of back and forth price action. Guys, I'll leave it there. Have a great night. See you tomorrow.